Kevin, all right, Kevin. Looks like we're live again with Emerging Frontiers TV. How are you today? Where are you?
Yeah, very well. I am back on the East Coast of the U.S. and very happy to be back online with EMF TV after Paul did such a good job of hosting last Friday.
Yeah, last Friday we sort of thought we'd give people a guided tour of what the platform's about. So if you missed that, it's essentially the previous episode. But today we want to focus a little bit more on whether or not the frontier market investing needs a new system. We obviously believe it does, but I think we want to sort of point out why we believe, the way things have been done, i.e. the way investors can access frontier markets, hasn't exactly worked very well. So Kevin, what are your thoughts on that? What's on your mind?
Yeah, I think that's absolutely right. For the past 15 to 20 years, people have looked to hedge funds or private equity funds as the market standard for the way to generate above market returns. And I think since 2008 and the global financial crisis, people have increasingly seen that maybe that isn't the case, and there have been a lot of studies coming out with increasing frequency that sort of state that the emperor has no clothes. And I think that this trend that we're seeing has been a big part of the genesis of emerging frontiers, which is that I think it's time for individual investors who have the means and the experience to do so to take charge of their own destinies, so to speak, as opposed to just throwing their lot in with big fund managers that charge exorbitant fees. Just as a point of reference, if you look at this chart that we put together as part of our investor presentation, the hedge fund industry is enormous, right? There are over $2 trillion under management globally, and for the past 10 to 15 years, the performance has generally outperformed most of the big equity indices. For example, last year, the industry generated returns of around 7.5% net of fees, which actually underperformed the S&P 500 index by 24 percentage points. It's pretty shocking when you factor in how much we typically pay to these fund managers to generate those kinds of returns, right? And then typically what you'll hear from those who defend the industry are that, well, we don't necessarily seek to outperform the market. We want to provide risk-adjusted returns, or we want to provide uncorrelated returns. But the fact remains that in 2008, the hedge fund industry lost $450 billion, which is more than they generated in profits through their entire history up until that year. So the volatility explanation doesn't really hold any water either. And if you look at, if you go back to that slide that was just up, I think the key point that we want to highlight, which is sort of our battle cry for emerging frontiers, is that the amount of profits that are captured through fund accounting has it's been skewed very heavily against the investor for a long time. And these aren't Main Street investors we're talking about. These are sophisticated institutions who are supposed to be managing pension funds, managing endowments, managing our retirement funds. And when you factor in the multiple layers of the funds themselves, these funds of funds, in many cases, almost the entire profit share goes to the fund managers, and only 2% goes to investors. And for those of you who are watching who want to dispute these findings, just drop us a line at info@Emerging Frontiers, and I'll be happy to send you the studies that support all this. But it's been eye-opening as we've really done our research in launching this platform and looked at what the true state of the financial services industry is. When you're down to the trenches like we've all been for the last several years, it isn't until you take a step back and look at what's really been happening that you say, wow, like there really does have to be a better way for us to manage our own money or find people who can help us do it.
Yeah, exactly. And also the thing is, I think that there's sort of a mismatch, right? The frontier markets are obviously awesome. If you look at, let me just put the slide back up. I mean, it doesn't take much convincing. I guess we all know this, right? They're starting from scratch. You're coming in at a below ground floor level. Everything has to be done there. When you travel there, you could think every day you can think about hundreds of things that just have to get fixed there, and that's always opportunity, all that. And so the thing is, there's a mismatch between opportunity. I mean, there's a lot more opportunity than people can actually access. And I think one of the problems that we're facing here, Kevin, is this slide, right? I guess we're looking at, let's just jump to this one. There's all these obvious names that are traded on stock markets people can access, but they seem to be very rich in valuation, don't they?
Yeah, they certainly do, and that's because these are the darlings of the frontier. And it ties in very well with the slide you just showed before that, which is that historically, for all of the bashing that we just conducted against hedge funds, keep in mind that reflects the entire industry, right? As hedge funds are like the scale is very centralized toward the top 20 firms. Basically, the entire financial services industry now revolves around supporting the 20 largest hedge funds, who generally outperform the rest. But of course, good luck as a Main Street investor in getting access to those funds directly without having to go through 2 or 3 layers, right? You have to be a very large, like multi-billion-dollar institution to be able to invest directly into these funds, typically. But then, if you look at the frontier markets, yeah, as we saw in the earlier slides, they've been outperforming the emerging markets for some time now. Investors are increasingly for assets in the developed markets in terms of real estate, fixed income, equity markets.
Yeah.
And they're looking for diversification into the frontier, but there aren't that many quality opportunities on the listed markets. So you'll see, for example, Yoma Strategic on that slide you had up on there, which is really the success story of Myanmar, which is in itself a...
Sorry, Kevin, I'm just dancing around there. Is it the next slide you mean?
Yep.
Yeah, right.
Yep. If you go to the next one, yep, right there. So if you look at Yoma Strategic, for example, right, this is a success story. Yeah, it's all right. You got a itchy trigger finger, Baldwin.
Yeah, the mouse is responding way too much.
Yeah, well, Yoma is it's I guess the standard bearer for Myanmar, which is in itself one of the more captivating frontier market stories right now, given everything that's happened there. And Yoma itself is a diversified real estate holdings company that's branching out into other industries now, such as construction or even financial services. And that company had to list in Singapore because Myanmar itself doesn't have a stock exchange. And there's enormous appetite amongst investors to get exposure to Myanmar, and Yoma's really the only option. So the end result is, after seeing very impressive returns in 2012, 2013, it's now very clearly, in my opinion, overvalued. Same applies to the other 2 companies listed here, which, by virtue of being large and liquid in the frontier, they've generated a lot of interest from investors. So it's really hard to find good value opportunities in the frontier in the public markets. And then when you couple that with the previous slide, which shows the performance of private equity versus the public markets, if you take away everything we just said about, don't take it away, but just put aside what we just said about hedge funds and focus on private equity performance versus the equity markets for the past 10 years. They don't always outperform the S&P, but what you see with the top and the median quartiles for private equity, they're typically they produce more reliable returns than the more volatile equity markets, right? And this is what we as investors want. We want reliability in addition to returns. So private equity is a very attractive asset class, but again, it's also very difficult to access as a mainstream investor, because you don't have access to the deal flow that the big funds have. The big funds aren't going to accept a mainstream investor with anything less than, say, $5 million or more. And there really aren't any alternatives out there for the man on the street to get access to those opportunities without going through several layers of fund managers and all of the fees that they incur. And by the time you do that, then the whole point of trying to invest in these funds is moot, because the fees you've incurred have basically eliminated any advantages you would have otherwise had.
Yeah, and I think it's probably time to pull up our mountain graph here, because honestly, I think that one really depicts it very well. This is the essence of this platform. It's going to help people really access something that is usually belongs to a sort of elite type club of investors, right?
Yeah, exactly. And let me just explain the graphic here. The whole point is that we, as the mainstream investors, the people who are trying to ensure a better future for ourselves are that man with the poles there at the bottom of the mountain. And the summit up there is the promised land, right? That's the private equity market. These are the institutions out there who do the deals that we read about every day in the Wall Street Journal or the FT, right? Where they're generating enormous returns due to their privileged access to deal flow, the sophisticated structures they put in place, and it's the market we all aspire to be involved with. The problem being that due to the high minimums that these large funds require, and all the regulatory restrictions that are put in place to supposedly protect accredited investors or even mainstream investors, is that you have to go through several layers of fund structures or financial services platforms to ever get direct access to that private equity fund. So, for example, something that's near and dear to my heart that I'm personally very interested in is agricultural and frontier markets, right? Opportunities that can produce a reliable income stream. These are potentially deep value plays where if they're well structured, well managed, you can see very attractive returns over a 5 to 10 year time horizon. But in order to get direct access to an opportunity like that, you have to typically invest through a mutual funds that your pension administrator administers. So you're already going through two structures there. That fund is probably going to invest into another private equity fund, which may even invest in another fund before that money actually makes its way into Africa or South America or Southeast Asia, where it's put to work. And by that point, every one of those gates on the way up the mountain has siphoned off their fee, and you as the mainstream investor, are left heavily diluted, and you probably would have been well advised just to avoid the whole process and just put your money into an equity index or an ETF, which obviously carries its own risks and sort of outside the scope of discussion here. But the point is, it should be possible, in our opinion, and this is why we're setting up Emerging Frontiers, it should be possible for the mainstream investor to summit that mountain, get direct access to institutional level opportunities without having to go through all these gatekeepers that are currently in place.
It's bringing the frontier markets from Wall Street to the Main Street. That's the mission here. That's the bigger objective. So, no, great. So I think we just ran through why there's definitely an opportunity for this platform, and why essentially this opportunity can only accelerate a lot more if you can make it a real asset class where any investor can allocate to. So definitely worth pursuing. So okay, thank you, Kevin. Let's if you find this interesting, you think this makes sense, go to emergingfrontiers.com. What you can do there, the first thing you should do is sign up to our mailing list, because this has only started, so there's a lot more information coming your way. What we're building here is not only a portal which is going to give people a lot of information and insights about the frontier markets, but it's not only about just telling the stories, but it's also enabling investors eventually to access these opportunities in almost a turnkey fashion. At least that's what we're working towards, aren't we? Absolutely right.
And we'll look forward to talking about this more next time, and also a bit more about how we plan to set this up to give mainstream investors access to all these opportunities. We'd like to talk a little bit more about the specifics and what they could expect as they go to Emerging Frontiers and what we're going to be rolling out in the next several weeks.
Yeah, and then apart from that, going forward, we're also going to have people from those markets on the screen. That's when it's really going to get fun. So we hope to be your goggles into this new, exotic, and amazing world. All right, Kevin, thanks a lot.
All right, thank you, Baldwin. Thanks for putting this together.
As always, it's always a pleasure. Until next time, thank you very much.